Welcome everyone. Today we have with us Vivek Mashrani sir, CFA. He did his mechanical engineering. After that, he later pursued his MBA at Nasi Munji University. Later, he worked at HSBC for almost 7 years and now started his own venture, Technofunda Investing. Welcome to the podcast, sir. He also recently launched his own book, You Can Compound, which ranked on the first rank on the very first day on Amazon. Congratulations, sir.
Thank you so much, and great to connect with you again.
Thank you, sir. My first question to you is, sir, what was your early life education looked like? Like, what inspired you to do first mechanical engineering and later MBA?
Superb. So yeah, early education, I think till 10th and 12th standard, it was pretty much normal. And peculiar of the state which I belong to in Gujarat and the place I belong to. Generally, the trend is after doing 10th standard, if you get good grades, you choose science and then either choose medical or you choose engineering, right? So that time, it was more of that trend following which was going on there, that we doctor to banna nahi hai, then let's do engineering. And I loved watching things, something which is physical and where I can relate to things. So that is where mechanical came into the picture, and that was an amazing journey for 4 years. First year I was struggling in maths and everything, but then ultimately learned a lot of things over there also, and finally managed to be university topper for a couple of times.
Wow.
And then again, Gujarat, we have a lot of this people who do equity, and all the family members and relatives,
Yeah.
they were into equity. So that is where I started also doing some bit of equity investing. And when I joined my engineering, I always had that regret ki I wanted to do it from top tier institutes like IIT and all, but there was no awareness at that point of time in our city. So I thought, okay, whatever chance gone is gone, but now I want to at least pursue from top 10 colleges. And then both the things somehow clicked, that I was looking forward to learn on stock market and do masters in reputed college. And then I got a call from NMIMS. I scored top tier in the NMET.
Wow.
And that is how it clicked. So it was one of the best, I think, 2 years I spent in my life, and a lot of learnings that happened, and made a lot of friends who are still connected, and we keep on learning from each other. So yeah, that is how the educational side of journey started.
How did you get interested in stock markets? Like you recently told, right, you wanted to do something which is related to equity in MBA, right? What was the inspiration to start in stock markets?
So see, it's like you have at least the results which you can see very, very swiftly. Like just in case of business, right? When you do
Correct.
business, what happens? Like you put effort, and then you can see result that okay, I was doing this, and this profit came in or loss came in.
Correct.
And same way, that kick, every single day you are doing something new. The market is throwing some new opportunities, some new challenges, and every day you have to test yourself, right? That if you are doing this, whether it is working out or not. So it's more like proving yourself every single day, learning from that experience every single day, and improvising every single day. So I think that experience helped me, that okay, there is a place where you can always learn and evolve, and you can grow and test it out real time, and you start getting better every day. So that was one of the kicker, I would say, in terms of equity markets. And then of course, I loved understanding the business broadly. So I am from a business community as such.
Correct.
That is where business is again in the blood. How things move and how the model evolve. So that was one more inspiring point around it. But I was not that good in terms of financial statements and all that. I made a lot of mistakes initially, but yeah, then I basically, and still evolving. It's not journey; it's never a destination.
Correct. Correct. What happened after doing MBA from Nasi Munji? You worked at HSBC. What was your experience like there? Was the job related to equity only or something other?
Yeah, Jay, I could not slightly get your last question. So after doing MBA in terms
Yeah,
of
yeah.
HSBC,
Yeah.
What was the journey basically? That was the question.
Correct. Was it related to equity also, your job at HSBC?
Yeah, so it was indirectly related to equity. So I started with UBS Verity in Hyderabad. I was there for 2 years, and then I jumped into HSBC, and that was a core investment banking profile where I used to work for FIG team, so financial institution group. So we used to track banks, insurance, and asset managers. And it involved a lot of element in terms of research, although it was more of a buy side or sell side research for M&A. But still, it was indirectly more like a research where you are analyzing a lot of businesses. You try to see how the balance sheets and income statements and cash flows are moving. And then you basically evolve in that research process also. And side by side, of course, that passion was there.
Stock market.
So I used to read a lot of Indian companies' research report, go and listen to con calls, attend AGM. So that any which ways, as soon as I started out from my MBA, I started that in terms of my journey. What like you are doing, right? You keep on listening con calls and you keep learning. So that way, for me, it was slightly later. I'm sure you will compound much more better in that sense. Yeah.
How did you ended up following the Technofunda perspective of investment, right? You were saying that your investment philosophy evolves over the time. Like as you said, right? You were learning over when you were working at HSBC, you were attending the con calls, you were reading the blogs. How did your investment philosophy evolve over time and then settle to Technofunda?
Right. So basically, see, initially, actually, not a lot of people know about it, but I started my journey in terms of trading, right? So when I was 2007, when I started broadly, it was option selling first, which people do last, okay? Then option buying, then paisa nahi bacha to intraday, and kuch bhi paisa nahi bacha to cash market, right? So that is how it started with a reverse gear, made a lot of mistakes. And then I realized कि भाई कुछ सीखना पड़ेगा. You need to like structure around it. And the thought process to join that MBA in capital markets, which was by the way affiliated with BSc, and we had a lot of course material supported by BSc. They used to give us a lot of guest lectures who came to my college and delivered those guest sessions also. But there, the structure actually came in place. So those 2 years, I learned about technical analysis, fundamental analysis, fixed income, SEBI laws, you name it, and we had it. We used to have a virtual trading room. We used to have a Bloomberg terminal. And then we had access to a library where I read more than 50 books in 2 years. In 2 years, I also did my CFA level 1 and level 2. So that time, everything started to like become a confluence of each other. Like one hand, I was learning about Charlie Munger, Warren Buffett, and how they used to invest.
The other side, Mark Minervini,
Martin Pring, all these guys, how they are doing it. Side by side, I was learning about special situations, how you can take advantage of buyback laws, how you can create arbitrage from mergers, how you can do arbitrage from delisting. All those things also was part of curriculum. So it was like exponential learning, and that is where I was looking for an answer, because I came with the question, right, that those all I made a lot of mistakes. Now for those mistakes, I was trying to find answer that, okay, how to perfect my screening process, how to perfect my entry, how to perfect my averaging up, how to perfect my exit, right? So those questions led me to think about various aspects. And when I read so many books on fundamentals, what I realized is that fundamentals is great. It tells you about how the financials move, how the business is moving, how companies evolving, and you get a conviction around holding the business. But then there is no objectivity in terms of entry, exits, or position sizing and risk management. And that is where, my interest on technicals also started increasing. And the best thing which happened is one of my professor, who was a value investing fund manager, who was a practitioner, and he used to come and teach us, pro bono, just without any salary or any kind of fees. I realized that, by applying value investing principle, he has become financially free and he is able to do it full time. We had a professor who was 34 years old, who was just doing candlestick charts. And he was also retired, right? So then I realized that, either you can do this and you can also do this. But if you do it correctly, then you can achieve that path. You can achieve your financial freedom.
There are many paths to nirvana.
There are many parts to nirvana. Until date, people keep talking and keep pulling legs about, value investing like that, growth investing is like that, momentum is like that. See, each and everything has their own pros and cons. If you do it correctly, you will get results. If you don't do it correctly, you will not get results. It's like cricket or volleyball or any other, sports. If you practice a wrong shot, you'll not hit sixes. And if you practice it correctly, you can become a Sachin Tendulkar also. So that is where, I thought that, okay, for me, at least whatever questions I was seeking, this was a perfect fit where I can get answers on entry, position sizing and exits from technicals. At least it were leading factor which were alerting to me to do the fundamental analysis. Right. So that is how both the things started combining. I started testing out a lot of things. I sat with my professors who were, most of them were practitioners, and started, evolving that journey. And then still it is refining, like every single year it is small tweaks here and there, additions, new learnings, all those things keeps coming actually.
Oh, that's true, right? For example, fundamental analysis will tell you a perspective of the company, like what's the business. Then the technical analysis will tell you when should you enter the company, when should you exit the company. Both will bring different perspectives, and you combine that, it's a fantastic image.
Correct. So it's a demand supply of the psychology which is driving the entry and exits and how that is captured. And then other side is the demand supply on the ground, right? So if Maruti price is going up, there is a demand of car somewhere, and if there is demand of car, then somebody's salary is increasing or somebody's disposable income is increasing, right? So it's all demand and supply ultimately, and they have demand in terms of their house that, okay, now I'm a 4-member family, I need a car. So it's all demand supply that is also driving fundamentals, but that is driven for the earnings part of it. And here then you see that based on earnings, how the investor is taking decision, that psychology, that demand supply gets captured by technical analysis. Yeah.
Fantastic, sir. When you were doing your HSBC occupation job, how did you? What was the inspiration to start your own company?
So it was more of accidental thing actually. So I had no thought that I will be doing what I'm doing. It was more of I was handling my portfolio, and still I handle my portfolio predominantly, and see how I can make it more bigger and bigger, and how I can evolve. And again, portfolio returns are again byproduct. The idea is you follow a process, you keep improvising it, the returns will keep coming as a byproduct. So the trigger point was, I think, in 2018 when I did a session. So again, that session was very accidental. So I was in London that time in 2017 on an assignment. And I just saw that there is some conference going on in Mumbai. And I saw that speakers, some of them were talking about fundamentals, some of them were talking about technicals. And nobody was actually talking about combination. So I just called up the organizer, and he's a good friend also now. His name is DJ. We call him DJ. His name is Dharmaraj. But, we basically interacted and talked about what I do. He told, okay, but I don't know you, like we are talking for the first time. How can I trust you that you are doing right in the markets? And that's where I shared some screenshots and some of the research which I had in terms of my portfolio, and he was really impressed. And then he told, okay, I'll give you a chance. And then I spoke on that platform. That is where the world came to know first time about
combination of
Technofunda investing. And then a lot of people who were there in that conference, and a lot of people who were listening that on YouTube, till it's again on YouTube also, it's there. They told me that, okay, now we want to learn more. How can you teach us how to do it? And I told, I'm slightly busy, and it's not my feat to prepare a presentation and do a lot of these content creation side, because I was more of a domain expert, not a content creator at that point of time also. So that's where, the journey started. And then those people are still associated. A lot of people, you might be knowing Gurjeet Singh and all those guys. Still we interact with each other, learn from each other. And we basically tracked a lot of these concepts together for 1 year. I was sharing whatever, case studies or new positions I was, researching, and everything I used to post in one group, and they used to follow it. And that is where the overall confidence started building up. And they told, now we want to learn more. And then I told, okay, let me think if there is any structure. And that is where I started the Technofunda investing community. And we have, very large number of investors
Uh,
out there. It's one of the biggest investing community in India. And yeah, basically that is how accidentally it started. And
well,
then I thought that if I have some free time, let me also share my knowledge from time to time. So once in a while, when I feel like, I do YouTube videos,
correct.
sometimes just like how you are doing right now. So it's just like from within, it comes as a calling to help more and more people, and I keep doing that.
When was this year? When was this year when you started, sir?
This was in 2020 when we
Correct.
started the Technofunda investing community formally. It was in May 2020, in the middle of COVID. And again, the other side was, because there was nothing to do outside, to
Huh.
travel and everything.
Correct. Correct.
So there was some time at disposal. So I thought, why not to use this time to have some positive impact rather than just talking about bad news and things, right? So that is how it all emerged.
When did you feel that you have achieved significant financial freedom from your own startup, that you realize that now I can quit my job, 9 to 5 job, and start doing this full time?
So that thing happened back in 2018 also, and I remember when we did Value Picker Chintan Baitak in
Huh.
Goa. That time I used to talk with a lot of fellow investors
Correct.
like Abhishek Basu Malik, we had Dheeraj Bhai, Ayush Mittal,
Little
we
correct.
had lot of other members who are like very good investors, and they have lived that path and gone through that journey. And that time I used to bug everyone, that my portfolio has become this much. I feel, I can do it full time,
Yeah.
and
Yeah.
I'm right now fully capable of taking care of my
Correct.
expenses. Should I quit my job and do it? And one most common answer which I used to keep getting is, यार job कभी मत छोड़ना, cash flow आ रहा है. It's always good because you can take advantage of market fall. Sometimes your portfolio will go down, you will not have emotional impact, and you can stay stable. And market doesn't need too much of active time, so
Correct.
that's where you will be doing something good outside your market hours, and still your portfolio will combine.
Correct.
That is where I experimented in 2018 also. I took a 1 month off and
Hmm.
thought that, okay, now I'm full-time investor, so what I'll do? Okay.
Hmm.
And then I realized that I was too much active, and I used to spend so much time on screen, and my trades were increasing just because I was free, right?
Correct. Correct.
So that is where the another thought which simultaneously came is, even if I'm doing full-time investing, that should be something which one helps other people, impact society at large,
Wow.
and also I'm like actively involved in that as much time as I want. So still, today also I don't like have full packed calendar. If I feel I want to do YouTube video, I just sit and record it, and I
Correct.
generally do live. If I feel I want to do podcast, I just sit like this and do it like half an hour before I was doing all my things, whatever was needed.
Correct.
Then I just plug it on. And because I'm doing this naturally, right? This process, whatever I'm doing is my own process. I'm living, breathing that process. You talk me at 3 o'clock at night, I can speak the same thing what
Correct.
you're doing right now, right?
Correct.
So that way it become right easy in terms of jumping into full time, and also making some positive impact. Always everything else will be byproduct, so if you add value in people's life, if you do right things which is needed for the society, the results, everything else will be a byproduct.
Fantastic. Another question that I have is that many of people create communities, but after a point, the communities become stagnant. Like no one is active in the community, no one is posting anything useful about useful that things that they did that can add value to the other members in the community. How do you prevent stagnation in a community like this?
Yeah, so first process is the right filtration process, right? You cannot have anyone and everybody join your community.
Correct.
Even for me, it is a very, very restrictive process. I
Correct.
don't, market it too much. And I have also a selection process, right? Each and every step, like there are 3 stages where people qualify and go to the next level. Again, they
Correct.
qualify and go to the next level. It's not like they just pay and they come in.
Correct.
Okay, so it's not like a paying game, because everybody can pay and come in, but then they will lose interest. So you need to find right kind of people who are really passionate about learning, really passionate about investing, and then they will automatically contribute. And the community should have a bigger purpose than investing, so
Correct.
we do a lot of charity thing within our community. We have mindset of helping each other. We have mindset of how you can actually collaborate and go to the next level together. So once that mindset is there and everyone sees that it is a win-win situation, if they share with others, that is where it triggers the exponential contribution within the community. So it's not just like making money. Okay.
Correct,
So that
correct,
is a byproduct again. So
correct,
once the purpose is slightly bigger, everyone starts realizing that it's giving great results.
correct, correct, correct. My next question is, what inspired you to write your own book, You Can Compound? And how is this different from others' book in the investing community?
Right. So basically, see, one thing which I always felt that in India we had very limited, ways in which we can learn. Okay.
Correct.
So if you think about books, also there are very few books specific to Indian markets as such.
Mm,
There are very few people who actually contribute and do YouTube videos or write articles
correct,
or write blogs. And in my journey, I've been inspired from so many people, predominantly, from Professor Sanjay Bakshi, who keeps on posting so much articulated content on his blog. He keeps sharing videos, and whatever knowledge he has, he tries to disseminate it. And there are so many such people, directly or indirectly. Even in Value Become Forum, we used
correct,
to learn from all these people who are part of the investment community. So that is where the thought came in that, there is so much of knowledge required, and we are not even scratching the surface. We don't have a 50 good people on YouTube who are like genuinely helping other people. We don't have 50 blogs in finance who are
correct,
helping doing right thing. We don't have 50 podcasts in country like India who is like genuinely giving. All the things we have is all, outside India.
correct,
From foreign, we listen to Rich Dad Poor Dad. There is nobody after Rich Dad Poor Dad we have been inspired from since many generations, right? So
correct,
that's where I thought, whatever I have learned, let me, combine it, and whatever way and form I can put it and simplify it, let me share it. And even one of my inspirational moment on writing book was from Mark Minervini's interview. So we did an interview with
yeah,
him last year in 2021. And he like reads so many books, and he has a library of more than 4,000 books, and he has read most of those books. And then after reading those books, he has distilled and shared his knowledge into 3 to 4 books which he has. And he, talked about that, how fulfilling that part was. And that was again a kicker that, okay, let me accelerate this process and write it as soon as possible. So that is how the different motivation came in. But the idea is, whatever I've learned so far since many years, I want to at least give back in some form. That is the purpose of the book.
great, great, great. All the links of the books are in description below. Go check the book out. My next question too is, the book-related question. So anyone who hasn't read the book should read it right away. In the book, you have mentioned the proper powerful words such as machine, which is so powerful that each and every letter in the word machine has some significant meaning that machine itself is seener in it. Can you explain it for the viewers? What is machine?
Yes, so basically the again inspiration and credit goes to William O'Neill, who created a similar
Cancel.
formula on CanSlim, right?
Correct.
So he has created for researching and modelizing the entire thing. And I was so inspired that, as an investor, we need to intuitively feel about what we need to do as a process.
Correct.
It's a very subjective process as such. So the more objectivity which we can bring in inside the investing process, the better it is. And that is where, I think you are also part of the discussion. You are interning with me that point of time. And again, we had Malhar also. And it was great brainstorming we did together, where this entire formula emerged. So the idea is, the first step which we need to think about is finding mega trends, right? So
Correct.
if something is like really having good longevity, you will compound and make your wealth for a long period of time. And that's why, again, the title of the book we have kept is You Can
You can
Compound, because everything's, revolves around
correct.
compound. So that is where you need to find first those mega trends where you can, ride that trend for long period of time and create wealth for long period of time. So that stands for M in the machine acronym. Then A is from action, right? So how promoters are taking action, whether they are walking the talk, are they having skin in the game? Are they buying more shares from the market? Are they willing to commit more capital to their own businesses? Whether institutions are acting on that company and they're buying more. And that again is a force, right? And the same way, that buying of good institutions, more people who are having the demand of that shares will reflect on the price volume action also.
Correct.
That both things, again, technicals and fundamentals will combine, and that forms a part of the equation. And then you have C, which is competitive advantage.
Correct.
And Warren Buffett has been talking about it since long time. You need durable businesses, and that durability can come from some of the moats which a company is building, so that the competition doesn't come in. Because you may be profitable for some time, you may have a long life in terms of business, but if you are not profitable throughout that entire life, then as a shareholders, you don't get anything in terms of value creation. So that value creation is very important, and that is where the C part of the entire picture comes into the place. And then you have H, which is high quality, right? So only growth and having competitive advantage, which doesn't translate into high return on capital employed, doesn't make any sense. So that high quality, high ROC is again something related directly with the value creation. And even one of the book which is very famous, Little Book of Value Investing, they have covered these three things. Growth, you need longevity and reinvestment of the cash flows, and you need high ROC throughout the life of the company. Then that is how the businesses compound. So that is how high quality came in. Then I is improvement. Like, as a person, we need to keep improving. Same way, company needs to continuously evolve in its journey, improve in terms of efficiency, revenue model, product innovations. Management should evolve and improve. All those things are categorized into the I side of the machine formula. And then N is something new, right? Like iPhone keep upgrading version of it, then they come out with a new product, and they keep on growing. And Apple is right now having market cap more than India's GDP, right? So that is how they evolve in their businesses. So that new factor, new strategy, new management, which can take the company to the next level, new product, new geography, that is all part of the end. And then finally execution, right? A lot of management keep
talking about
they keep talking about it, but they don't have a practical experience or that execution fire to make things happen. And unless you don't do that, even if that earnings triggers are there, the market is conducive, the mega trends are in place, you can grow on an average, but you cannot grow massively if you want to outperform the peers in your industry. So that is where that execution E is very, very important. And that also comes with earnings growth simultaneously, right? So that is how the entire format is structured.
The thing that I like about machine is that covers, I think, every aspect that a good company should have with mindset of fundamentals and technicals. It's a fantastic combination around both of them.
And it's very intuitive also, because
recall value is very high.
Mega compounding machine, right? So we want our portfolio to be a mega compounding machine. That it keeps compounding so well that it takes care of us in the future. So that's where it perfectly linked, and with my background of mechanical engineering, the machine part again also resonated, that okay, something which I've studied and something which I've worked in my mechanical engineering, this is it. So that is how it came in place.
Fantastic, sir. All my questions are over right now. We had asked on Twitter about questions from Twitter Q&A. We have received 2-3 questions. The first question is from Rohit Ingole. He's asking, we do a lot of work in terms of reading, researching, scuttlebutt, and many more things. However, investing takes decades to reward us. Why is that so?
Yeah, it's because, there is, not basically investing is a long drawn process. It's not like trading where you have instant gratification. And a lot of things in life are like that, right? So you exercise for 1 year, 2 year, 3 year, and the results will start showing after 3-4 years. Of course, you will start feeling better and you'll be fitter, but then the actual result you will see, like after 5 years, you'll be completely different person. Same way, like I can relate with you what you are doing, right? You keep on doing, learning about investing at such an age. And by the time you are 25-30, you will realize that you learned so many things, you interacted with so many people, and that will also compound, right? So investing, it's basically because of the underlying businesses. The underlying businesses needs to grow, and it always takes time. And it's not that you cannot generate returns very fast. So you can of course generate return very fast if you follow right process. So if a business is just on the verge of transition, like if they are just about to launch a very massive product, think about Macintosh just before they are launching, and Apple, nobody was knowing Apple, and they just came out with a revolutionary product. The share price can go very fast, the re-rating will happen very fast, and we have seen a lot of people in our value picker group have done that, right? We have seen a lot of people have made 100x, 50x, 10x, 20x in less than 5-7 years.
Correct.
So it's not always that investing returns take time, but the investing mindset takes a lot of time, because you will make a lot of mistakes in the process. You have to evolve in terms of yourself as a person, because investing, what I feel, is a reflection of yourself. If you have too much ego, you will fight with the market and make loss. If you are too much greedy, you will buy at a peak and make loss. If you are too much complacent and tight-fisted, you will buy it low and then fear out very, very soon and book profit too early, right? So investing is actually reflection of our own personality, I feel. So unless you evolve as a person, your investing will not evolve. So that's why it takes time, right? Because as a person, we always need time to evolve.
Fantastic. The next question is from Srijit Ghosh. He's asking, how do you value companies based on future of free cash flows, and if DCF valuation is an effective way or not?
So DCF valuation is a great way. The only problem with the DCF I face is there are too many variables and assumptions which are from our head, right? So you can actually have a long-term growth rate of 3% on a sustainable basis. You can also have 4%, and both are right and wrong. There is no one answer to it.
But a slight correction between them will lead to a huge jump.
Yeah, so 1% change in the terminal growth rate can have a huge impact in terms of the overall DCF value. Same way, the kind of assumptions you take in terms of the growth of the company. See, if it is a very steady state company, FMCG company, saturated businesses, you can do it very predictably and you can get a idea. But if it is a new business, like say for example Zomato, we don't know, like it can fold in 5 years and it can do absolutely brilliant in 5 years. It's a very uncertain kind of business, right? Not like a Nestle or FMCG business where every household will use that Colgate and that shampoo every single day, and the population is growing like this, and you can model it. So there are ways to model business in a different way, and for steady state businesses it is very useful. For other businesses it gives a tentative idea, but that is not end of the world. Like I've seen businesses going beyond valuation multiple times and staying below their fair value for many number of years. And that is where, even if you are right in your valuation, the market psychology is very important. When people feel that it is the right time is also very important. And that is where, blending of technicals also becomes very, very important.
Fantastic, sir. This is the end of the podcast. Everyone, do check out You Can't Compound book in the description below. It recently broke the record of Chetan Bhagat and Jay Shetty's book in the first day only. Thanks for coming over the podcast, sir. Really learned a lot.
Thank you so much, Jai, for having me. And it was really awesome talking to you. And keep doing the awesome work. I am super inspired at this age. What you are doing is really amazing. Thank you so much.
Thanks.